Hello everybody, I'm Clara Hermit and this is Breaking the Mould, our regular market review show with our investment research director, Russ Mould. It's another week and again I'm asking Russ, what's the fuss?
The fuss, Clara, this time is all about actually the FTSE 100. It's getting very, very close to its all-time high of 6,930. So everybody's waiting to see, will it get there? Can it go any higher? Okay, now it last got there 14 and a half years ago. So it's been a long old trek. And it would be very exciting if it did and moved onwards, particularly given that investors are now going to have a new tool at their disposal this summer, the new ISA from the 1st of July. Now, having said that, remember that all-time highs in stock markets are a reason as much for careful analysis as they are enthusiasm.
So what do you mean by that?
Okay, now if you remember, the real secret to making money in the stock market is to buy low and sell high. And the market right now is high. Or to put it another way, as Warren Buffett says, be fearful when others are greedy and greedy when others are fearful. Now markets right now, they're in greedy mode. Lots of new flotations, lots of merger and acquisition activity, and again, trading at very elevated levels. Now I'm not saying the market can't go higher. I'm just saying stick to the disciplines that have worked very well for you since the market bottom. You know, when people come into the pub offering you tips, just remember, tips are for waiters and rubbish dumps. So keep your ears shut, your eyes open, and do your analysis. The real secret to long-term investing is buying companies that can pay and grow their dividends consistently over time. It might not be wildly exciting year to year. They're not immune to lumps and bumps in the market, but in the long run, that unlocks the eighth wonder of the world, the power of compounding. That's where the profits really rack up.
So on that note, can you give us an example of a company that's capable of regularly increasing its dividend?
Yes, we've actually got a company called AVIVA, which is producing numbers on the 27th. Now that's AVIVA, an engineering software company, FTSE 250, not AVIVA, the FTSE 100 insurance company that's actually developed a bad habit of cutting its dividends over the last couple of years. Now AVIVA, software company, it's actually forecast to increase its dividends by around 9%. To 26.2 pence when it reports those numbers. That's up from 9 pence in 2009. And over that 5-year period, the share price has gone from 6 quid to 20. So it shows you how the market can respond when it sees a company that's generating lots of cash can pay out these dividends. Now, it's a good business model. They sell software to firms who then often buy the upgrade and service and maintenance. So about 70% of the business is actually recurring year on year. Now, again, AVIVA isn't immune to the ups and downs of the economy entirely. The profits did go down during the 2009 global recession, but overall, its products save customers money when they're building an oil rig or a power plant or a shipyard or a ship, and that's a very, very powerful proposition, as you said, and overall, its trend growth is strong. I mean, the shares have wobbled a bit recently, emerging market worries, strength of sterling on the overseas business, so it'll be interesting to see what Richard Longdon says on the 27th, because the shares have come back from 26 quid to 20.
Wow. So that's software out the way. What else have you got for us?
Well, really quickly, sweeteners and steel are the two things we're going to wrap up on. Sweeteners is TATE and LYLE. That's going to produce numbers on the 29th. Most famous for bags of sugar and golden tins of golden syrup. It actually sold those businesses 4 years ago. It's now a specialist in sweeteners and corn milling for ingredients for food companies. And the problem here has been there's been a couple of trading statements this year that have left a bit of a bitter taste. There's been very big price pressure in sucralose, its artificial sweetener. So when Javed Ahmed comes up with the numbers on the 29th to sort of give the share price some support, because it's gone from 9 quid to just over 6, hopefully he can reassure people that you're seeing some easing off of that price pressure.
And what about steel?
Yorkshire's finest on the 3rd of June, SEVERFIELD-ROWEN, numbers on Tuesday the 3rd of June. Steel expert, if you look around the London Olympic Village or the Cheese Grater skyscraper, you'll see its handiwork there. Now, therefore, it's quite economically sensitive or exposed to big projects. So when the UK economy rolled over, so did its profits. There's been a new boss come in. They've had a bit of a fundraising to prop up what was quite a weak balance sheet. But new boss Ian Lawson's got stuck into the cost base. And it is a logical beneficiary if the UK economy really does start to motor again. And as an added bonus, it's got a business in India in joint venture. And with the new government there are hopes that the Indian economy is starting to turn around a little bit. So the market's looking for 4 million quid of pre-tax profit for the year that's just finished, against a loss the year before, and 8 million quid for the year that's just begun. So we'll see.
So thank you very much then to Russ. This has been Breaking the Mould. We'll be back with you in 2 weeks' time, but until then, look after yourselves. Take care.